Hi Bulls, I'm solar analyst Travis Hoium. After a few years of struggling, the solar industry is really starting to improve, and we're starting to see results for solar manufacturers on the bottom line. SunPower reported earnings that were much better than they expected and increased full year guidance, which is a really strong sign not only for the second quarter of the year but the second half as well. We saw Canadian Solar report better than expected earnings as well, and Trina Solar and Yingli Green Energy both increased their guidance. They haven't really released second quarter numbers yet, so we don't know what their results look like on the bottom line, but they're expecting both shipments and gross margin to be better than expected. So that's some really good signs. Some of the things that are driving that are strength in the U.S. residential market. That's really been one of the most consistent areas of solar recently. Utility scale projects can kind of ebb and flow, but the residential market really has been growing quarter over quarter over the last 3 or 4 years now. Another position of strength that's popped up more recently has been Japan. So SunPower and Canadian Solar both said that about 30% of their panels went to Japan. They're generating high margins there, so that's going to help drive the profitability of the solar industry in the second half of the year. Look for other Chinese manufacturers to have benefited there as well. The thing that we don't know quite what the demand will look like in China for the second half of the year, so that's something to keep an eye on as earnings keep coming out from Chinese manufacturers. China announced 35 gigawatts worth of, they wanted to install 35 gigawatts of projects over the next 3 years about. So that should be a huge source of demand for the industry. So look for more information on that, about that coming out over the next month as those Chinese companies report earnings. But the interesting part of this earnings season is that companies that used to be in a position of strength in the solar industry have really flipped sides and are now in a really tough position, in particular First Solar. So First Solar is pretty much 100% dependent on utility scale projects now. They make a thin film product that isn't as efficient as Chinese modules, far less efficient than like a SunPower module. So they get very little demand outside of their own projects, and their backlog has been falling, margins have been falling, so they're in a really tough strategic position. They bought some assets from GE, some technology assets, but GE really gave up on its own thin film solar a couple of years ago, so I don't really see that changing the company's direction going forward. So really some strategic questions for First Solar right now. So some companies are in a position of strength in the high efficiency market, or even Chinese module manufacturers. First Solar is just the opposite right now. I think they're going to be struggling because they aren't participating in some of the markets that are doing really well right now. Sort of the same thing going on at SunEdison. They reported a fairly weak quarter. They're in the wafer supply market, so that's still very oversupplied, and their project business isn't generating the kind of returns that they're hoping to in the future. So a couple of companies struggling, but I think the way to play this right now is to stick with manufacturers who are really high on the efficiency scale, because we've seen already that lowering cost is easier to do than raise efficiency. So that's why SunPower is seeing a lot of strength right now. Chinese manufacturers who are on the high end, like Canadian Solar, are seeing strength as well and better margins than their competition. So those are the companies that I would stick with in the industry, but look for a lot of growth in the second half of this year. Definitely a great opportunity in the solar market. That's all for now. Thanks, and fool on.